What's going on, everybody? Ryan Thompson, the Assumable Guy, and this is the Assumable Guy Show. Today, we're going to talk all about VA assumptions. And if you are a veteran, an active duty military family, or if you're not a veteran and you want a 2.5% rate anyway, this show is for you. So here's the quick background on the VA loan. Before we get into it, though, everything is assumable to everyone. Every VA loan is assumable to everyone, regardless if you've served in the military or if you have access to VA benefits. You can still assume a VA loan. Nuanced and details are coming, but I just want to get that out there. If you're listening to the show and you're like, I'm not a veteran, this still works for you. So here's a quick background. VA loans are mortgages that are backed by the Department of Veteran Affairs. It's available to any active duty military, veterans, and certain surviving spouses. They're often better than other loans. There's no down payment required. And in 2020 and 2021, the rates on those were incredibly low, like 2 to 3%. And here's the key. All of those loans, all VA loans, they are assumable by law. You do not need to be a veteran to assume one. Anyone can assume a VA loan, civilian, investor, first-time buyer, doesn't matter. And that surprises a lot of people. People are skeptical, they don't believe it, but it's true. I promise you, we have done it with clients. Here's where it gets a little complicated, though, and I want to make sure you understand this, especially if you are a VA seller, because it affects you and it affects something called your entitlement, which I'm sure you know what that means. And every veteran who's eligible for a VA loan has what's called entitlement. And it's basically the government saying, we'll guarantee this amount on your home loan, end quote. The entitlement. It's basically what lets veterans buy a home with $0 down. So when a veteran sells their home and someone assumes the loan, the question that I often get from VA sellers is, what happens to the seller's entitlement? What happens to my VA entitlement? There's two scenarios. Scenario one, the buyer is also a veteran. They substitute their own entitlement. In that case, the seller's entitlement gets freed up completely. The seller can use it to go and buy their next home. Everybody's happy. And in scenario two, the buyer is not a veteran. And in that case, the seller's entitlement stays tied to the property, and a portion of it is stuck in that property until the loan is paid off or refinanced. Now, sellers, I know what you're thinking. Why would I give up my entitlement? Why would I do that? That's a fair question. Here's the thing that most people don't realize, though. You don't lose all of your entitlement. You keep the remaining portion. So let me show you how this works with some math. You're in Colorado Springs. The county loan limit is $806,500. Your original VA loan was $350,000. So what you do is you take that $806,000, you subtract the $350,000, and that's your remaining entitlement. So what does this mean for you? It means you could go buy another home using your VA benefit with no down payment, as long as it's within that remaining limit. And if you go over, you'd only need to bring 25% of the difference. So on a $475,000 purchase, that's $60,000 over your remaining entitlement. You'd only need to bring $15,000, 25% of that $60,000. It's a great deal. You're not losing your ability to buy, and you're keeping most of your VA benefit. So what I encourage VA sellers to think through is you're actually fully leveraging your VA loan. You're saying, I'm going to use my VA loan to help me sell my home now and go buy another property for 0% down. An incredible way to fully leverage the VA benefits that you earned. Here's another thing that most sellers don't realize. VA is not the only low down payment option out there. So if you sell your home, you take the cash from the equity gap and you go buy your next home with a conventional loan, you only need 3% down on this conventional loan, or 3.5% if it's an FHA. With that cash you're walking away from the sale, that's probably going to be pretty easy for you to do. There's also down payment assistance programs in every state. In Colorado, it's called CHAFA. You can get into a home for as little as $1,000 down and 0% interest on that loan. So basically, CHAFA will loan you the down payment, and it's 0% interest rate, and then you go get an FHA loan, and that CHAFA loan covers your down payment. So another way to get into a 0% loan, except the first 5%, 3.5%, is covered at a 0% interest rate. So it's actually a pretty sweet deal. I have a lot of VA sellers. Both spouses are in the military. They can leave their entitlement and then go use the spouse's entitlement on the next house. There really are a lot of reasons why a VA seller might decide this is the best option for me to let anyone assume this. Maybe they want to sell the home for a premium, and they're willing to do that. They're willing to leave their VA entitlement to get a premium on their home. So several options there. Wanted to explain that because it's really important to understand some of those nuances. And if you don't, sellers, buyers, agents, they kind of get hung up in the uncertainty of those nuances and they'll shut it down. Uncertainty, confusion, they shut down deals, and you really want to get clarity on these details. Here's something a lot of people don't know. If a non-veteran assumes a VA loan where the seller leaves their entitlement, there's no occupancy requirement for the buyer. The seller already met the occupancy requirement of the VA loan. It means you can use that property as a rental from day one. No requirement to move in. Now, compared to an FHA assumption, you've got to intend to move in within 60 days and you got to intend to live there for a year. But for investors, this VA entitlement where the seller is willing to leave their entitlement is huge. Basically means you can assume a 2.5% rate on a rental property, which is absolutely impossible to do today. What's also cool about that is you can get that property for significantly less than 20% down. The returns on these as an investor are so good. Cannot do them fast enough. The investors are eating them up. They do take 60 to 90 days to close, but you can do one. As many as you can qualify for, you can purchase as an investor. Now, for veteran buyers, you have the gold mine. You have the VA entitlement. You have the ability to assume every assumable loan out there. VA loan, FHA loan, all of it you can assume, and all of those sellers are going to be open to doing that with you, because if it's a VA seller, you can substitute their entitlement. If it's an FHA, you can move into the property and assume that FHA loan. Now, do you substitute your own entitlement, or do you look for a seller who will leave theirs if you're a VA buyer or an active duty service member? If you substitute your entitlement, the seller is going to get their entitlement back, and that makes them way more likely to say yes. Most sellers are not willing to leave their entitlement, and obviously we talked through the consequences of that. It makes sense. But now your entitlement is tied up with the property, which means you can't use it at your next duty station. Now, another hack for buyers with VA entitlement is you could potentially find someone who's willing to leave their entitlement, and you assume the mortgage, you stay at your duty station for 2 or 3 years, turn that property into a rental, and then you go to your next duty station. If you can't find somebody willing to leave their entitlement, you still have some of yours left, and you can assume a mortgage there as well. You could keep doing this every duty station and turn them into rental properties and pursue financial freedom that way. It's an awesome way to go. A little hack for you at the end. I'm Ryan Thompson. This is the Assumable Guy Show. Next episode, we're going to get into the actual process. What happens after you find a property and make an offer? What's the timeline look like? The assumption processor, who is that? What does that mean? The banks are annoying. And how do we get these deals across the finish line? Because they are awesome. See you on the next one.